Okay, good afternoon. Good afternoon, everyone. You're welcome to today's edition of the Indices Market Mastery. And as usual, this will lead us into the live trading for today. For those who do not know, please be informed that we have, with this same link, we have the morning and the afternoon trading session. So in the morning by 8 o'clock, we usually have the morning market review. And then by 2 p.m. with this same link, we have the live trading session or live trading US session. Okay, so what we are doing today, or what we'll be doing, we hold this every Thursday. Okay, let me rephrase it. Mornings and afternoons, so Monday to Fridays, this link is always active for the 8 o'clock and the 2 o'clock class. Okay, but on Thursdays you usually have special class that starts from 1 o'clock, like today, 1 p.m. like today, and that's the Indices Market Mastery. So what we are going to do is go through the indices market, do our analysis of the indices market, and that will lead us into the US session, where we will now look at taking trades on various instruments, indices, currencies, commodities, just like we do in the morning. Okay, you're all welcome. I think that we should. This is just 2 minutes past one. I think we should give say 5 minutes. See how many persons join us within 5 minutes. I always like to start once we have 30 persons, but I think we're very close to that number now. So I will not say 5 minutes. I'd say once it is, the time is 2 minutes past one. Once it is 5 minutes past one, we will start. Okay, so we're going to give 3 minutes, see how many persons join us within 3 minutes, and then we'll start. Thank you. So just please stay put. Okay, I don't think we have to wait any longer. We asked to wait for 3 minutes more, and here we have it. So we have a good number of persons, so I think we can actually start. Good afternoon to those of us who are just joining us. You're welcome to today's edition of the Indices Market Mastery. I was trying to explain how this will work going forward. Please note that this particular link that brought you to this meeting, this link is available for the morning session and the afternoon sessions, Mondays to Fridays. Okay, so you join us in the mornings by 8 a.m. and join us in the afternoon by 2 p.m. Okay, This same link will take you mornings by 8 a.m., afternoon by 2 p.m. But on Thursdays, we will be taking Thursdays to especially look at the indices market. Okay, so on Thursdays we'll be having the indices market mastery, so that will merge with the afternoon session, and that is why this one begins by 1 p.m. So this will work from 1 p.m. into the 2 p.m. live trading session, and then like that. Okay, so that's just to clear the air. That is how you would be able to use this to your advantage. I always want to begin by letting us know that we are very much interested in your education, in the sense of we want you to know about the market. I think that is where the freedom is. When you understand the market for yourself and you can make this analysis, it means that within you is the ability to create wealth. You understand? So we want to make sure that you have as much information about the market as possible at every point in time. So let's jump right into it. For Indices Market Mastery faithfuls, you understand that we always like to begin by giving a very brief introduction into what the index market is, just in case we have one or two new persons who are joining us for the first time. I also want to state, please, that this particular class, you will see that it's recorded and it's streamed live on YouTube. Okay, streamed live on YouTube. So if you head over to our YouTube page, our YouTube channel, you will find this event there, as well as other contents that we have created regarding one or two strategies or the other. Okay, so you can head over to our YouTube, like, subscribe, share, and everything, all the good stuff. Okay, so that said, let's go into indices market very quickly. The index market is, index generally is what we use to grab, to group some assets, look at them as a whole. Okay, look at them as a whole. That is what index is all about. When we say index, we want to track the performance of a group of assets, measure them as a unit. You understand? Here, that is where we have the index market. Okay, the index market is an indicator that measures the performance of the stock market. Okay, that is where we have US 30, also known as Dow Jones. We have US 100, also known as Nasdaq. We have US 500, S&P 500, Standard & Poor. We have US 2000, Russia 2000, we have D30. These are, will I just say, 5 major. They're not the only ones we have. We have UK 100, we have SPA 50, we have FR 40, we have RUS 50. So the underlying factor is that the index market, or how they are denoted, is it always has a number beside it, like US 30, US 100. You can see there's only a number beside it, and that number is referring to the amount of stocks that are combined as a whole. Okay, to give a very small background into how important this stock trading is, or index market is, and how profitable it is, we need to go back to understanding what shares are. Okay, when we talk about shares, certain companies, when they want to increase their capacity. Okay, one of the best, or one of the most popular ways to do it is to offer shares to the public. Okay, so when they offer shares to the public, what happens is that we buy shares, right? We buy shares. Some of us, I believe many of us here are shareholders. So we buy shares. Now, what that means is that the company is gathering capital from us and giving us a particular percent of ownership. You understand? You own a particular percent of the company depending on the amount of stake you have bought. Now, that company can now gather capital to increase production and then share profits, which they call dividend, one time or the other. That's shares. Okay, now when you bring shares together, a group of shares makes a stock. Okay, and then when you group stocks together, you have an index. You understand? So that is why the performance of these indices, okay, the performance of these indices is very much a reflection of the performance of the individual stocks. Okay, the performance of US 30, for instance, is very much a reflection of the performance of JP Morgan, the performance of some of those stocks. The performance of US 100 is very much a reflection of the 100 tech stocks that are there: Apple, Facebook, Tesla, all the good stuff. So when majority of the shares, when majority of the stocks are doing well, that means people are buying majority of the stocks. That index is going what? This is, and that is why it is easier. People find indices easier to trade than individual stocks. Because with individual stocks, you just need to look at that particular stock, whether it's going to gain strength or not. But with an index, you could say, oh, majority of the stocks are strong. So let me, do you understand? So I'm going to go ahead and share my screen with us. First of all, I will take us to investing.com. I take us to investing.com. If you can see my screen, what we have here is investing.com. One of many websites where you can get information about assets in the market. So all I need to do, I'll come to indices, and then I can select NASDAQ 100, which is the same thing as US 100. So let's say we select that, or we have Dow Jones here, which is the same thing as US 30. So let's say we select that. At this point here, you can see that currently showing closed here. It will be open for trading once the US session begins by 2:30. Okay, but with this place here like this, we can look at the components of US 30. Okay, we can check out the components of US 30. We have this. Okay, look at this. These are the components of what? Of US 30. You can see that you have 3M, American Express, Amgen, Apple, Boeing, Caterpillar, Cisco, Coca-Cola, all of them. Goldman Sachs, IBM, JP Morgan, Microsoft, all these come together to form the movement of US 30. Now, you will notice that currently, as it stands now, there's a majority of weakness in the stocks that make up US 30 right now. Now, remember that these values change per time, okay? And it looks like, on investing.com here, it's frozen because the market is closed. But what I'm trying to say is that at this point, this particular investing.com is very concerned about the US market and US session. Right now, on the European session, US 30 is actually being traded, okay? But what I'm saying is that if you have components like this and the majority of them are weak, it's likely going to affect the overall performance of US 30. You understand? So that is where an index is actually different, okay? Let's move on from there. Let's go back to our slide, okay? I also want to talk about fundamentals. We've said it again, and I feel like maybe I'll brush it one more time. Like I said, these meetings are on our YouTube, so you can go and you would get where we explained in depth on these fundamentals that affect the US market, okay? But what I just want you to know is that for the fundamentals that affect the US index market is fundamentals, especially from the US zone. You have fundamentals like the monetary policy, you have unemployment update, you have US consumer price index, that's CPI, you have GDP update, okay? So these are some of the major fundamentals that affect it. Remember, we have said all fundamentals from the US zone is likely going to have an impact on the US index, okay? On the index market. Why is that? Now, this business we are doing is what we call trading. Another name for it, or another term for it, is exchange, right? What we are doing is we are exchanging, okay? So we are giving something for something else. We are collecting in exchange for what we are giving. We are giving in exchange for what we are collecting. So at every point in time, we want to make sure that what we are receiving in return has a higher value than what we are giving out. Okay, and that is what That's what trading is all about. And that's why, for those of us who deal a lot with Naira and dollar, we'll find out that, people are buying a lot of the dollar now. When you want to buy the dollar, you need to give something. You need to give something, most likely your Naira. Good. No. So now, even in the US, as it is with the US indices, is exchanged via the US dollar. So what that means is that if people want to buy more of the of stocks, if people want to buy more of the index, they need to give out more of their dollar. They need to sell out more of their dollar to be able to buy more of stocks or more of indices. If people want to sell more of their stocks or they want to sell more of their indices, it means that when they sell it, they are going to get more of the dollar. They are buying more of the dollar. They are selling their stocks. They are buying the dollar. So that is why fundamentals from the US zones affect the US index market, because there is always, usually, frequently, not every time, but usually we have a negative correlation between the dollar and stocks. If stocks are strong, if the index market is strong, if people have more confidence in stocks, they will sell their dollar and buy stocks. So dollar will be weak. But if people have more confidence in the dollar will be strong and the index market will likely become weak. The same kind of relationship that the dollar has with gold is what it has also with the US index market. Okay, so that is it. Now, we have fundamentals like the monetary policy, we have unemployment update, we have US CPI, we have GDP update. Okay, we have these various fundamentals, and each of them affects the market in a special and a particular way. You understand? We're going to begin with monetary policy. Let's try and explain monetary policy. Remember, again, I have said that it's very important that you understand these things, so that you can make your own market decisions, okay? And make market decisions. Now, the first one we're talking about is the monetary policy. Monetary policy. And when we refer to monetary policy, we're talking about what the government puts in place, the strategy that the government puts in place to be able to control or regulate the circulation of money in the economy. Okay, so money is the blood of an economy. Currency is the blood of an economy. Now, depending on how available currency is, that will determine the strength or the weakness of that economy. Okay, if currency is so much in supply, it's going to have an adverse effect. And if currency is too short in supply, it's also going to have an adverse effect. Okay, what I'm trying to say is that too much of everything is bad, right? If something is too available, the value drops. Like I always say when I explain something like this, many of us will say, no, I don't want to visit my friend too much. I feel like I go to his house every day, and so that respect is already dropping, right? Exactly. So it's just the same way with the economy, and that's what government of nations that work. That's what they're interested in. So they're saying, what is the Yes, David, you're correct. What is the impact? Right now, the amount of money circulated, what is the impact? And that's what monetary policy is all about. Okay, that's what it's all about. When there is too much money in an economy, that is going to likely cause inflation. When there's too much money in an economy, especially when it is too much in comparison with goods, that means that there will be a lot of demand. And what happens, for instance, if I take us into a store and all of us here, say for instance, we want to buy a pair of shoes, okay, but somehow the only shoe that is available, we only have about 10 or 15 shoes, and we are over 60 here, but we have only 10 or 15 shoes. What will happen? Immediately the price of that shoe will skyrocket. Okay, because you have too many persons that are willing to buy a less amount of goods. Okay, so when a government notices that there is a problem, like, they always try to maybe raise interest rates. They try to raise interest rates. They try to take contractionary measures, things that they likely do to reduce the amount of money in circulation. Okay, that's what it's all about. Okay, then sometime during recession, the government will try to do things to make sure that there is more money in circulation. You understand? So that is what monetary policy is all about. All these policies that refer to interest rates, all those high impact news that refer to interest rates, all those high impact news that refer to consumer sentiment, all those high impact news that refers to GDP, all those things, many of them happen to fall within or under the monetary policy umbrella. Okay, good. Then we have unemployment update. Unemployment rate is also something that affects the market. I'm saying this because I meet a lot of people who, and generally our interest as traders, or most persons who I have met, is to trade the market technically. A lot of people say, oh, I'm not a fundamental trader, I'm a technical trader, I don't like, and that is fine. You understand? It's fine. But the idea is this. The idea of all that is okay, let's explain what unemployment rate is all about. If you have people who are ready and willing to work, okay, but somehow they cannot get a job, that is unemployment. Okay, now the amount of unemployment in an economy also tells how strong that economy is. If there is a high rate of unemployment, it's very possible that it shows weakness in that economy. It means that the economy is not producing as much as it is. It means that the economy, they're not using as much as their human resource. Okay, because high unemployment. Okay, high unemployment means that production is not at a high. It also means that people will not have enough to be able to demand, to be able to buy. And if they don't have enough to buy, if demand is low, that weakens the economy. So when unemployment data comes out and it is high, it likely weakens the dollar. And if it weakens the dollar, it's possible that people will say, oh, for this weak dollar, let me better buy stocks. So most times what is bad for dollar is good for the index market. And most times what is good for the dollar is usually bad for the index market. Okay, that's unemployment. Let's talk about CPI, Consumer Price Index. And anytime I talk about this, I always let people know that at every point in time, there is usually something that controls the market more than others. There's something that controls the market more than others. There is a most recent gist that the market is riding on above others. And one of such, which we've had for over a year now, is Consumer Price Index in terms of inflation. Okay, so CPI stands for Consumer Price Index. What does that mean? That is just, remember we said anytime we mention index is just a way to measure a group as a unit. That's what index means. To measure a group, to measure the performance of a group as a unit. Good. Now, when we talk of Consumer Price Index, it is basket of consumer goods and services. Basket of consumer goods and services, and we try to measure the change in the price of that particular basket. Okay, so the way they calculate Consumer Price Index, it's either calculated year on year, it's either calculated monthly, month on month. Okay, and then there's something else we call core CPI. But the way it's calculated is that they pick some popular consumer goods. Pick some core consumer goods, and then they try to compare the price. They say, oh, the last time we did it, what was the price? What is the price now? Has the price increased? Has the price reduced? Okay, so if we're calculating CPI and in Nigeria, we'll be taking goods like rice, beans, of course, groceries. We'll add groceries. I don't know. Does anybody here know what I mean by grocery? Does anybody here know what I mean by grocery? Let me see if there are people who if we have woke people here, who can tell me what I mean by grocery now? Yeah, now just what do I mean when I say grocery? I'm referring to a particular product. Oh, this one product I'm referring to as grocery. So what? Oh my God! God bless this EMP. Yes, yes, that's it. It's not milk. It's not milk. It's not milk. It's Gary. Gary is now called grocery. Please, let's pay attention. Let's move with the trend, though. It's not even supermarket things. Mr. Tunji, follow the trend now. Things have changed. It's not groceries. Those days we used to call it supermarket. Now grocery refers to Gary. When we okay, so right now it is Gary. Groceries Gary, or you can call it cassava flakes. It's just a way to touch things up. But yeah, now in Nigeria, if we wanted to calculate CPI, we're going to be using rice, beans, gari, those things that we normally consume, and we'll calculate the price from before and the price now. It will now tell us if the level of inflation has increased. There's always inflation in an economy. There's always inflation in an economy. But the idea is we want to know if the inflation level increases or decreases. You understand? Don't worry. Whatever happens with this 130 news, we'll get a bigger effect on it when the US session opens by 2:30. That's what we are working towards. So just chill. Because this data is released before the US market opens. So the US market will react to it. You understand? So let's just continue. Let's flow. Now, I'm trying to explain CPI and how if you especially for the remainder of this year, even into next year, if you can properly measure CPI, you can know how to trade indices and make a lot of profit for yourself as a fundamental trader. Now, remember, I have said that CPI is measuring inflation. Now, if CPI comes out, if CPI data comes out and it shows us that there is an increase in inflation from last month to this month, inflation has increased. If CPI comes out like that, what that will do is that, especially right now, that should normally that should show a weakness in the dollar. It should say, oh, that's not good. Prices are just increasing, inflation. But over the past 1 year, we have noticed that whenever CPI comes out and it is higher than expected, it strengthens the dollar instead. And the reason for that is because one of the major ways that the US Fed, one of the major ways that we control inflation is by increasing interest rates. One of the major ways we control inflation is by increasing interest rates. So when inflation data comes out and investors see that it is higher than expected, they begin to buy the dollars because they will expect that, oh, for inflation to be high, that means the US government will be pressured to increase interest rates. That's how it works. Okay, so that is why CPI is very important data. In fact, as someone who is trading in this market, among all these high impact news we're talking about, one of the most important high impact news you want to look at is CPI. CPI and FOMC. CPI is one of them. FOMC is another one. Among all the high impact news, these two seem to actually really drive the market. Do you understand? That's it. That's it. I think that the next FOMC that will be coming out, I think that will be in September or thereabout, and that one would really, I expect that one to really move. Okay, I believe that as we approach that they will let you know. But that is how CPI works. When CPI comes out higher than expected, it gives strength to the dollar and it weakens stock. But when it comes out lower than expected, it gives weakness to the dollar and it strengthens stock because of the expectation of investors that high inflation will make the government to increase interest rate, and so that makes the dollar favorable. In fact, we'll go into analysis very soon, and you will see that one of the reasons why there's even been a fall, let's say weakness in the dollar, is because is because of the interest rate hike. The federal government has not been increasing interest rate as people have been expecting. Okay, let's continue. So that said, I think it is, let's go into our chart. Let's go to our chart and analyze the index market one after the other. We'll go to our chart, we analyze it, we see what's up. Okay. First of all, before we go into our chart, oh, there was a slight drop in unemployment claims. A slight drop from 240K to 239K. That's cool, but we are going to take more advantage of it during the US session. So let me share my chart with us. Okay, so let's begin with the dollar index. Okay, let's begin with the dollar index. Now, and this is the importance of the index market, the index market mastery. Okay, well, we hold this every Thursday. Hold this every Thursday by 1 p.m. Now, if you look at the dollar index on the daily time frame, you can see how well or how far the dollar has actually fallen and how much it has done to, regain strength over time. Okay, you can tell how much it has fallen and how much it has done to regain strength over time. Okay, the dollar index has shown us, a very clear downtrend over time that it has done. And this the reason for this is because one of the things that have weakened the dollar over time, even if yes, it's been trying to recover, that is the high level of inflation in the US. Okay, the high level of inflation in the US. After the first big fall that the dollar had, if you check on the weekly time frame, the first big fall the dollar had was around 2020 lockdown. Okay, from that lockdown, sometime around March, the dollar index fell. That is around this time. Around this time here, we had a very strong fall on the dollar. Okay, we had fall on the dollar for the majority of 2020. Okay, the majority of 2020. And then after that, when we came out of COVID, the dollar actually increased. But it's from beginning of this year, dollar has also not fared well, just the same way it did not feel well the beginning of 2020. Okay, beginning of 2020, it did not look so well because of COVID. Okay, because of COVID. Beginning of 2021, it also lost strength. Now, beginning of 2022, it gained strength, but beginning of 2023, it became weak. But why? Why is that? The problem that the dollar had is because from COVID, it has tried as much as possible to ameliorate the effects of COVID. During COVID, what happened was that I try to explain this every time so that we can understand what the issue with the dollar is, and you can look at the chart with open eyes. Okay, during COVID, everyone was at home, and so industries were not producing. People were not producing. People were at home. Literally everybody was not working. Okay, only traders were flexing. But what the government did, the government of the United States did then, was to introduce a kind of stimulus in the sense of providing some kind of stipend for the citizens. So during COVID, the US government was paying some level of stipends to them, which was very good. Okay, now what happened? What happened was, by the time we came out of COVID, people had more money than the available goods, because there was the level of production had dropped in the US during COVID. Nobody was producing, but the government was giving out money. Okay, now people came out of COVID and said, okay, I want to buy this, but because production was just opening, we did not have many goods to meet with the demand. We did not have as much goods to meet with demand. And because we did not have goods to meet with demand, that's what led to inflation. And that is why the US government have been battling with that inflation. And the way they have been battling with that inflation has been increasing interest rates. So towards last year, the US government ventured into very aggressive interest rate hike. And that interest rate hike is what gave them all the strength you see on your chart here on the weekly time frame. But as they increased interest rate, they continue to monitor the level of inflation. And they found out at a particular peak that inflation was now dropping. Inflation was dropping. You know, there's something economists call, should I say it? Let me say it. There's something, there is increase, there is decrease. But economists, they now came, they said those two is not enough. There's something they call increasingly decreasing. So for instance, something can be rising by from 2 to 5. Something can be increasing by 3. If it increases by 3, if it starts from 2, it will go to 5. If it increases by 3 from 5, it will go to 8. But instead of it to increase by 3 to go to 11, it now increase by 1 to go to 9. So what the government noticed was that, even if inflation is increasing, it does not have as much strength as before. So what they did was they started reducing interest rate hike. And because of that, the dollar continued to fall. And that is why we have the dollar at this low end. Okay, that's why we have the dollar at this low end. Now, that said, if we check the dollar on the daily time frame, and check where the dollar is right now, you agree with me that the dollar has done what technical analysts call a double top. And what does that mean? It means that the dollar has created a kind of resistance around here that it has gotten to again, which is here. We can see how there's a resistance here, right? The last time the dollar was here, it was rejected. And right now, it's still there. And we are seeing a rejection today in the dollar. That's before the US session begins. Okay, so it tells us that there is a strong resistance on the daily time frame that the dollar might likely respect today and experience some weakness for the rest of today. And what does that mean? It means that the dollar experiences that weakness for the rest of today. It's possible that the stocks continue. And that is why from this morning to now, stocks have been buying. After the index market fell yesterday, they've actually been pushing up. But if you check the dollar index on this this daily time frame, you find that it has hit a resistance and seems to be rejected around that resistance. Okay, so but when the US session begins, we will now be clear as to, especially since even if the data that came out today on unemployment claims came out today and it came out slightly better, but not too much. We're expecting unemployment claims to be at 240,000, but the actual that came out is 239,000, which is better than expected, but by just 1,000. For those who do not understand, unemployment claim is different from unemployment rate. Unemployment claim is different from unemployment rate. This is unemployment claim. It's different from unemployment rate. Okay, when we talk about, but they both measure the same thing. When we talk about unemployment claim, we are looking at those people because again, the US government has a plan for people who are unemployed, meaning that they receive a particular amount, I don't know, from time to time. Okay, now for that amount, you need to file, you need to request for it. Okay, so they use this unemployment claim, they get the statistics of the number of requests that they have, the number of requests they have, and they use it to judge the level of unemployment in an economy. So if the number of people that requested for unemployment benefits increases, it means the unemployment rate has increased. You understand? So that is how it works. But like I said, it came out slightly better, but just by 1,000, and maybe that is why we even see the dollar weakening, still weak, see the last week. But remember that when the US session opens, analysts may begin to start reacting to this data. Okay, and that's when you begin to see strength in the dollar. Okay, but if you check it on 1 hour, you will notice that. Check it on 1 hour, you will notice how well US 100 has sold. Okay, and as most likely would have approached a trend line. Approach a trend line from this verified support here, which by the time you draw and try to connect a few of these lows, you find that our price has approached that particular point. And it's possible that from this point where US dollar index is, price will begin to head upwards, and during the US session, indices will still fall further. Okay, but we're going to analyze them one after the other. But for US 100, looking at for US index, this chart I'm looking at now is USD IDX, the dollar index. This chart gives you the general strength of the dollar. Okay, gives you the general strength of the dollar. Okay, good. So let's continue. Okay, so looking at the dollar index right now, it's on a trend line support. It's on a trend line support, and so it may likely just fall to this, but we don't see it breaking this week's support until the US session comes out. Okay, but let's now check out the index market. We're going to look at the index market from various time frames before we make our decision on the 1 hour time frame. The last time I was here, I taught us a strategy regarding scalping in the market. Okay, I thought of a strategy regarding scalping in the market, and maybe we'll do something like that. But let's begin with, since we're talking about the US indices, let's look at US 100. Let's begin with US 100. You see how well this buy was expected, and okay, support and resistance. Sorry. Good. Now let's begin with US 100 on the weekly time frame. That is on weekly time frame. You will notice that on the weekly time frame, US 100 has really this is the third week of consecutive selling. Okay, this is the third week right now of consecutive selling. If you check, people always say that during the end of the year, towards the last quarter of the year, stocks generally lose their strength. During the last quarter of the year, stocks lose their strength. People begin to, a lot of people hold stocks for it. At the beginning of the year, people buy stocks usually get strength. Indices get strength at the beginning of the year, but it feels like towards the end of the year, they begin to get some level of weakness. Now, if you remember what we looked at in the dollar, okay, we looked at in the dollar, we found out that dollar was trying to recover strength, and that is why you would also notice that US 100 has been falling. This is weekly time frame, so it's a very big, a very huge time frame. Okay, it's a very huge time frame. But let's go to the daily time frame and see what US 100 has done on the daily time frame. Now, good. Here we have US 100 on the daily time frame. The first thing you will notice that the same way the dollar index made a double top on the daily time frame is around the same way the US 100 chart is making a double bottom on the daily time frame. Okay, and we have explained to us that a double top, a double bottom, they are trading patterns. When you have a double bottom like this, you expect that price is headed back upwards. Okay, now if you have a double top, you expect that price is headed downwards. It works on the various time frames. As long as you see that pattern, if you see that pattern on the 1 hour, it means that if you see a double top on 1 hour, it means that price is about to head down. If you see a double bottom on the 1 hour, it means that price is about to head upwards. Okay, but looking at this, looking at US 100, you can see how it has created a kind of double bottom. Also, if you check it on 4 hours, you begin to see that on 4 hours, it has given some kind of bullish patterns by this hammer forming here, and then this very good bullish candle here. Okay, so price seems to, US 100 seems to be doing a level of recovery of the fall it has made for a while. Okay, making a kind of recovery of the fall it has made for a while. That is what it is doing. Okay, so if we check it now, if we look at like I said, on 4 hours, oh sorry, let's go to 1 hour, see the performance of US 100 on 1 hour. You will notice that US 100 has been able to create an uptrend for itself on the 1 hour. Not a full-blown uptrend, but it seems to be creating, you know, making a kind of trend for itself where it's pushing up, you know, gradually. You know, it's pushing up gradually. And, you know, I was speaking with someone today and I said, I expect this push up to continue today, at least for today. I expect this buy on US 100 to continue for today. You understand? And that is why we have this. Of course, US 100 is on a downtrend. You know, the best place you want to enter your sell, since it's on a downtrend, is on a resistance. But with what we saw on the daily time frame, because of the fact that we see a double bottom on the daily time frame, we expect this kind of retracement to continue. Okay, and this is a kind of retracement that can actually make good profit for you. Okay, a kind of retracement that can make good profit for you. So I expect that when the US session begins, you know, we have a small resistance at this zone here. We have a resistance at this zone here. Why do I say we have a resistance here? We have a resistance here because the last time price was here, it was a support. It was a support. Okay, support and resistance is like a story build, like a let's say a 3-story building. Okay, when you move from the down floor to the first floor, you know, when you're on the ground floor, you look up, you see the ceiling above you. But by the time you move to the first floor, that place you are looking up is now beneath you. That is how price also works. At this point in time, this place was a support. But when price broke it here, this place has now become a what? A resistance. So if price can break above 15,029, if price can break above 15,029, you know, the body of the candle close above 15,029, we expect price to what? To head upwards. Okay, but you know, for swing traders, for long-term traders, I'm talking people with huge capital in their account. For long-term traders, you know, it's expected that towards the end of the year, especially in the last quarter, you know, it's possible that stocks would generally retrace, would generally fall to experience a push up at the beginning of 2024. But you know, the advantage for us as intraday traders is that whatever situation is happening in the market, we can take advantage of it. Okay, we can take advantage of it. Good. Now, this will bring me quickly to explain a little thing about the scalping strategy we talked about the last time, and this will also help me with analyzing this 50-period moving average that we have here. You can see I just applied my 50-period exponential moving average, applied to close. I have it here as a resistance, and if you notice, you find out that this particular 50 period has been resisting price for, you know, some days now. Okay, at least 2 days now straight. US 50 period moving average has been resisting price. Okay, so what will likely happen is that when the 230 session happens, this place might still form, it might still give you a formidable resistance. It might give a formidable resistance. What you likely want to do is, if somehow price can break above this 50 period, then we can now buy to this resistance. But I want to show something on 15 minutes. I want to show something on 15 minutes. There is a small strategy, you know, with which I usually scalp the market, especially for those who scalp. The small strategy with which I usually scalp the market, and that is I use my 50-period exponential moving average on the 15 minutes time frame. I use my 50-period exponential moving average on the 15 minutes time frame. What do I do? This is my 50-period moving exponential. This is my 50-period exponential moving average. This is what I have here. The idea is this: once I have two consecutive bullish candles, once I have two consecutive bullish candles that break above. Now, for this strategy to really, for you to really enjoy this strategy, you can use 5 minutes, but 15 minutes, I feel 15 minutes is better. Okay. You need to be able to monitor price, especially when price is on the moving average. You need to be able to monitor price at that point. Now, if price breaks above the moving average, the first bullish candle break above the moving average, and the second one also forms bullish, two consecutive bullish candles break above my moving average, I'm going to take a buy there. I'm going to zoom in and show you zones where I will likely take a buy. Okay, so that we don't get it twisted. This is the first one here. At this zone here, you can see that price came down here, price sold here, closed below my 50-period moving average. Okay, but the next candle was not bearish. If the next candle was still bearish, I will sell. The next candle was not bearish. Instead, the next candle was bullish, broke above my 50-period moving average, one, and the next one was also bullish. So I have two consecutive bullish candles above my moving average. That is where I will scalp and take a buy from. I'll take a buy there. The only time I'll close this trade is if somehow after that two consecutive bullish candle I'm taking a buy, price now comes and still closes below my 50-period moving average. That's when I'll close it. Okay, but I'll take a buy here, and when I take a buy like that on 0.05, I usually target, say, from if I'm trading with 0.05 on US 100 on any of the index, I'm scalping on any of the index, I usually target, say, 7,000 naira profit to start dragging my stop loss to engage price. You understand? Here from 7 to 10,000 naira per trade. Okay. Now it depends on, some persons are confident enough to ride the trend, but that's just the idea. Okay, two consecutive bullish candles. Now look at this scenario here. The next one here, we had the first bullish candle break above, but this is not a bullish candle. This next one was a doji. This next candle was a doji, so I would not have entered a buy here. If I have two consecutive, if it is not consecutive, if it is not two consecutive, I will not trade. In this example here, price broke below, okay, 1, 2, because I would have sold here. But let's say somehow this was not a good trade, right? Because I had two consecutive bearish candle and I sold here. Let's say I'm going to enter at the close of this candle and then I would have sold to this point. Maybe it would have given me up to 7,000, maybe not. But let's say this is not a very good entry. Of course, no strategy will give you 100%. Okay, but the idea is that when you're scalping and you can get an entry where you have two consecutive bullish candles above for a buy or two consecutive bearish candles below for a sell, you're going to make more profits than loss. You understand? Hey, so we'll continue. Now, I said that the advantage of this strategy, or where you're going to get this strategy right, is when you can be there when price is interacting with the moving average. That's the best time to enter quickly. Look at this. Look at another example here at the top here. See another example at the top here, where you have yes, it works on all instruments. It works on instruments, but it's better since it's scalping and you're on a smaller time frame. It's better you use it on fast moving instruments. I usually don't advise to use it on oil because I feel it's a very fundamental instrument, but for the US, the other index market, you can use it. You can also use it on gold, use it on currencies also, but just remember that you're scalping, and for currencies you may just be targeting about 5 pips. Okay, 5 pips, and then you can lock in your profit. If it continues going in your favor, good for you. Okay, so I was explaining something. I said, look at this example. This first candle broke above my moving average. Okay, remember I said two consecutive. So the first one broke above, but the next one was not bullish. I'm not going to buy. Instead, this broke below, and the next one was also what? Bearish. So this is two consecutive bearish candles. The first one breaks below. That means that the first one will close below. You have to wait for the candle to close. The first one closes below. The next one also bearish. I'm going to look out for a sell. Okay. If price heads back towards my moving average, If price heads back towards my moving average, I can immediately take a sell or make sure I have 2 consecutive bearish candles and then I can take a sell. So the exponential moving average. Thank you. Thank you so much for helping me reply. Yeah. So it's exponential moving average and it must be 2 consecutive. It's not that the first one broke above it is bullish, then the next one was not bearish, and the next one was bullish. Now, by no, together, side by side, they have to be bullish or they have to be bearish for you to buy. Okay, no. In fact, you don't apply this during a high impact news. I will not advise that you apply this as a news comes out. No, it's a technical move, it's a technical strategy. So it's not to be applied during a high impact news, or it's not to be applied at the beginning of a market, like 8 o'clock. You want to start using this strategy around 9 or around 3 p.m. Something like that. So you should not use it during high impact news. Okay, good. So yeah, I've explained once again, consecutive, 2 consecutive. Okay, in this example here, 1 2 1 2, and then I can sell, target at least 7,000 naira on a 0.05. Now, I'm not saying that you have to just close it at 7, but what I'm saying is, if you're the kind of, some people do what they call trailing stop, or some people do what we call break even. So if I enter this, if I have 1 2 and I enter this sale, I put my stop loss above the first one that broke it. As my profit is increasing, I can continue dragging my stop loss to protect the profit I'm in. You understand? But I always just calculate, target at least 7,000 naira or 10,000 naira. At least if you get 3 of this in a day, it's a good day using 0.05, especially when you have good volume and then you can use a higher lot size. So if I'm using 0.1, for instance, I'm expecting at least for 15,000 naira profit on a 0.1. Okay, if I'm using 0.5, I'm expecting at least 70,000 naira. You understand? So that is the idea. Now in this case, 2 consecutive bullish and then I buy. Okay, 2 consecutive bullish for a buy, 2 consecutive bearish for a sell. Okay, if price heads back towards my moving average, gives me 2 consecutive bearish candles, I sell. Okay, that is just to explain, but that is why you can see US 100 continuing to push up, and like I said, I still expect that push up to continue, but we'll see when the US session opens. I expect that at least price is going to approach this 50 period moving average. Okay, I expect that price is going to approach this place. So we have a good distance from here to the 50 period for you to enjoy a buy. I feel like price is going to approach 50 period and most likely maybe fall from here. But if price can break this 50 period moving average, break this resistance we have here, then it's headed towards this weak resistance. Okay, so that is, we just looked at US 100. Let us look at DE30. Okay, so yeah, DE30 was one of the top gainers, and that's why it has fallen more than others. One of the biggest gainers. DE30 actually approached his latest his new high. He approached his new high to this, was it? I think it was in July. Okay, let's see where this candle is. Approach it at in July. Approach a new high in July, and from that point he actually tripped and fell down. But it has approached this verified support zone. It's not yet at the verified, but it's already at the zone, and so around this zone, retracement is expected. You understand? Retracement is expected around this zone, and you will notice that it has ranged between this resistance and support zone. It has ranged between this resistance and support zone. Right now, it can do one of 2 things. It can either break this support, and if it breaks this support, it tells us that the German stocks are retracing for the year. It likely means that for the remaining 3 months from September, October, November, December, then indices might actually, DE30 might continue to witness a decline. That's what it will actually mean. Okay, but it also means that if it continues to push up, then it's possible that we have it approaching at least this zone where I have my next resistance at. Okay, so but let's look at it on a weekly time frame. 2 weeks back, especially when I was talking about this and I talked about how this weekly time frame was a bearish engulfing pattern and how that we should look out for a sell on DE30. I remember saying that, and I was saying that the best place to enter is at resistance points, you know, and that is still what the case is like. But right now, we check it on 1 hour, DE30 actually hit a verified support on 1 hour. It hit a verified support, and throughout this morning it's been buying. But what are we to do on DE30? There's a high chance that DE30 will likely not witness a boost in the market once the US session starts. What we're going to have witnessing a boost in the market is still the US indices and US related pairs. Okay, but what we are going to say is that if you check the candlestick formation of DE30, you find out that this place here formed a resistance. This place here, you had an inverted hammer, you had a confirmation, and so this sell is likely going to continue on DE30. This sell is likely going to continue on DE30. So for DE30, for people who want to trade DE30, once price begins to trade below 15,791, once price begins to trade below 15,791, what that has done is that has given us a low, a retracement, and a lower low. And so I would expect that sell to continue. I expect the sell to continue beyond 15,791. 15,791 here. If price can break below this 15,791 zone, you can actually continue to. I'm using 15 minutes just to pick an entry point. If price does that, you can now continue scalping your sell. The only way price is going to continue buying is if it breaks this particular point here, and I don't see it doing that. I don't see it doing that. You should have usually done that with its European volatility during morning time. Price should have come to test it, but volatility was not enough for it to even get here, and so that is why we see this fall. Okay, so that's why we see this fall. I expect this fall to actually continue on DE30. I expect this fall to continue on DE30. So let's look at the other US indices. Let's look at US 500. Okay. Okay, good. So US 500. Oh, this is interesting. Okay, this is 15 minutes. 15 minutes. We check it out on 1 hour. You will notice that the same thing that US 100 had done this for this morning is what it's doing right now. Okay, and with the way these candlestick patterns are looking, it is looking like when US session begins, we might actually see a fall for this thing. But what we are going to do right now is that we have noticed there's a resistance here where US 500 is. Let's check US 500 on the daily time frame. Okay, US 500 on the daily time frame has approached the support zone. Okay, I know that we are looking at this weak support here, but even before this point, you find out that the last time price came here, US 500, the last time it got here, last time it sold to this zone, it was rejected to go to the upside. Okay, and so for me, this is a very strong zone. This is a strong zone that US 500 has approached. I think that even when the US 30 session, even when the 230 session begins and price just first makes a noise, I expect that once price comes again, even if price comes again to test this particular support, I expect that US 500 to actually buy for today, because at least to even respect this zone where it has approached. The last time price got here, it pushed back up. So I expect that push up to actually work today. You understand? But yeah, we are going to see. So what we will do for US 500 is that we are going to mark zones where we will look out for taking advantage of a buy once the US 30 session begins. Why am I saying US 30 session? Once the 2:30 session begins. I see that many other persons are joining us now. They were expecting to join by 2 o'clock and they missed out on the index market. So I'm just going to say this again for those joining us. Every Thursday, we begin by 1 p.m. Every Thursday, we begin by 1 p.m. Okay, good. Good. So this is what my position is going to be like on US 500. I expect that if US 500 trades above 4438, if it trades above 4438, then I will buy to this weak resistance here. Okay, I'll scalp a buy, I'll buy, do whatever to this weak resistance at this point here at 4449. That's what I will do. Okay, that's what I will do. For the sell. For the sell. Now, we have a low here. We had a higher low here. We had a higher low here. We had a higher low here. We had one here and we had another one here. Right? So for this US 500 to break structure for me to believe that this thing has broken structure and sell, I'm going to be selling below this particular low here. This low is where I'm going to be selling below, because if we can trade below two lows, if we can trade below this low and this one, then I would expect that, okay, it's going to sell, and at least, even if not to the proven support, at least it's going to sell to this particular zone here. So where I'm going to look out for a sell on US 500 is around 4423. From 4423, I'll look out for a sell on US 500 to around 4417. Okay, that's what I would expect for US 500. I will look out for a buy from 4438, to around 4449. But for a sell, I will want it to sell below the last two lows it has had to 4423. That's at 4423. I could actually look out for a sell there to around 4417. Okay, that's what I will do on US 500. We're going to check out US 30, and then we'll look at dollar pairs. I will look at gold, look at dollar pairs. Okay, we have US 30 here. So US 30 is in a tighter spot than the rest are, and it has not done as much retracement as the rest has done. US 30, you would notice also here that it reacted more to this particular news than others. You understand? So that is why you have the fact that, okay, we have a very tight trading here on US 30. We have very tight trading. We've had it move from this zone to this point here. The news pushed it up. And so, let me see. Okay, good. So this is what we have on US 30, and this is what I will advise. You'll notice that price has made a kind of range, even on 15 minutes here. Price has made a range around this zone here. Look at it. Price has made a range here, and that range has been throughout today. Throughout today, price has made this range here. It has gone up, it has come down, it has gone up, it has come down. Okay, so the best thing you want to do when trading the US session today is to trade above and below this range. That's what I will advise anybody trading US 30 to do, to wait for this range to be broken before you trade. Before I go back, let's look at it on 4 hours. Well, on 4 hours, it looks like after this hammer here, price might actually be retracing to the upside. Okay, but because of the range that we have seen on 15 minutes, my advice for trading US 30 today will be to wait for price to make a breakout of this resistance and this support. Okay, so what you want to do is let price conveniently break 34930. Let it break above 34930 before you consider a buy. And if it breaks that way, you can look out for a buy till where this weak resistance is. Okay, if it breaks above this point, you can look out for a buy till this 35,000. So you can buy from 34930 to around 35,000. Okay, but if it breaks this support, and by US 30, please, I'm going to state this. What I mean is that the body of the candle has to close before you decide. Let the body of the candle close before you decide whether it has broken it or not. Okay, this range has to be broken, and the good thing is that if it breaks like that, price will continue in that direction for a while. So if price breaks the 34,930 zone, I expect it to buy to 35,000. But if price breaks below 34,780, if it breaks below 34,780, then I expect it to sell to at least 34,700. Okay, to sell to around 34,700. That's what I would advise for US 30. Okay. Um okay, let us move on to US 2000. So US 2000 on 4 hours, he actually gave a bullish, just like all of them did on 4 hours. Gave a hammer. US 100 gave a hammer on 4 hours. US 30 gave a hammer on 4 hours. I can't remember if we saw that on US 500, but US 2000 also gave a hammer, which signified, an end to the buy, but that could also be a kind of retracement. Okay. Now, if you check US 2000, US 2000 is its own is just giving a free fall, giving a free fall in the market. And one thing that would also make us wonder or make us pause is the fact that even on the 1 hour time frame, US 2000 already gave us something like an inverted hammer at the top of that buy. At the top of this buy, it gave us an inverted hammer. It gave us something like this that is like a signboard that says stop considering any further buy. That's what this signboard means to me. Stop considering any further buy. Okay, that's what it's saying. So in terms of entry, especially when the US session begins in the next 18 minutes or thereabouts, what I'm going to do is very simple for me. I am going to be looking out for these particular entry points or entry zones in the market. Now, if you check US 2000 from this particular point here, let's even start from this low. From this low, we had another one here, and we had this. Okay, so where I'm going to go in on my US 2000 sell is below this most recent low. Below this point here, I'm going to go in and come out at this weak support if this sell continues. If this sell continues below this last low here, especially this Mario Bozo, this strong bullish indication, if it comes below this point, I'm going to be selling to this point. So that means that I will be considering a sell at around 1879. And then my take profit will be around 1876. That is where I will consider coming out of the market. But if somehow price pushes up above this point here, if price pushes up above that point, I'm going to be going in for my buy at 1889. I'll go in for my buy at 1889. I'll come out of my buy at 1892. Okay. Yes, that's what I would likely do. Okay, because you can see how this sell that we are seeing, all this red candle we are seeing now, is sentiment towards the open of the US session. You understand? And so we must allow that US session open so that we are not stuck. You understand? We must allow that US session open so that we are not stuck. So I will go in below the most recent low, this point here, and then I'll come out at this weak support. I'll go in above the weak of this my inverted hammer that showed this sell. I'll go in above that point and I'll come out at 1892. I'll come out at 1892. Okay. Let me look at gold. Since we are considering the US session, let's look at gold. Oh, good. Now, for gold, you will notice that I have drawn a kind of trend line. Okay, and if you see this trend line, you drawn this for quite a while, you will notice that gold is still on a downtrend, but it seems to be bouncing in between, ranging around this zone till we'll have a major range. Gold is approaching a zone where we're likely going to have a major range in the market till a breakout happens. Okay, from here, gold pushed up. I have a buy on gold, but I'll likely want to come out of this, because of the fact that it has approached my trend line. And I always say that since gold is a reactive instrument, since gold reacts to the performance of the dollar, it's better that since gold reacts to the performance of the dollar, it's better that we are always considering the dollar when we are making our analysis on gold. Okay, but that said, you would notice that gold has approached a trend line that has made a kind of resistance for it, and it's possible that from this point it's still going to head downwards. Okay, it's going to head downwards. Another thing to notice when we look at gold on the daily time frame, the same way the dollar index has approached a double top. Remember when we were analyzing the dollar index, we said that it was at a double top, and it's likely expected that it will fall from that double top. Technically speaking, that is how it works. A double top mostly, not every time, but a double top mostly tells you about a push up, a fall in the market. And that is also how gold has made like a double bottom. It's gotten to a point where the last time it got to that point, it was rejected. And right now, it's at that point. And right now, we have a bullish candle that is looking like a bullish engulfing, although you are not advised to name any candle until the candle has closed. Okay, so technically, you cannot say this is a bullish engulfing, but right now, price is trading and is covering the whole loss of yesterday. Okay, so what does that mean for us when we're trading gold today? We see gold approaching this untested resistance. Okay, we see gold approaching this untested resistance. So we look at it. I look at it on a smaller time frame on 15 minutes, approaching that resistance. But on the 15 minutes here, we can see that gold is currently at a resistance. It's at a resistance. We have another one around this zone here. So what are we going to do? Quite easily, what you want to do on gold is, if gold, we're using 15 minutes, so if gold breaks this verified resistance on 15 minutes, if gold breaks this verified resistance, and by that I mean if gold closes at around 1903, if gold closes at around 1903, I would expect that gold will buy till around 1906. If gold closes at around 1903, I would expect it to buy till around 1906. You understand? I will expect that it will buy to 19. That's what, but we have a verified resistance here. It's a verified resistance. And so what I will do, okay, if you consider the pattern of gold here, this particular reaction that gold made was a reaction to the unemployment claims that came out. Okay, but where I will go in for my sell on gold is below this point here. Where I'll go in on my sell on gold is below this point here. I'm going below where it was last rejected. Okay, so I'm going to go in at that point on my sell, and that's around 1897, and then I can come out of the market at around 1895 or thereabout. Yes. With the way it's looking now, it's having a lot of momentum. Remember that we looked at it and it was in a double bottom on a daily time frame. So technically, gold should continue to push up. Technically, if you have a buy on gold, you should hold on. You understand? You may have a buy on gold that is not at profit yet, but with what gold is doing on a daily time frame now, I advise you hold on. You understand here? But if it breaks, for those of us who want to take a trade, if it breaks 1903, if it breaks 1903, then we can at least buy today till 1906. Okay, if it breaks that point, buy today. Then if it trades, so let me adjust this a bit. If it trades below 1897, it trades below 1897, then I would expect that we sell to around 1895. You understand? I would expect we sell to 1895. Okay, that's for gold. Then someone was asking if you can hold a buy on US 100. it's US 100 is on a, it depends on where your entry point is. Personally, because of the fact that it has done a double bottom here, I personally expect US 100 to push up. Like I said, I was talking to someone today, and I personally expect US 100 to actually push up. Okay. So it depends on where your entry is. The truth is that yes, push up, but US 100 is on a downtrend right now. So the buy we are expecting is just a kind of retracement today. At least we have let me see, let me make this a 10 period moving average on the daily time frame, and let's see where, yeah. So we actually expect a kind of a major push up in the market. If I were to analyze this, I would say with what we have here, we should expect still a push up on US 100, especially when it breaks this 50 period moving average on 1 hour. Okay, but where to look out for US 100? Where to look out for? Good. Okay, good. Now we have US 100 has been making couple of higher highs, higher highs, and it has made a low here. This particular point may be another zone for a push up. So what I'm just going to do for US 100 is just go above its high for today. I think that when the US session begins, if US 100 trades above 15,023, I would expect it to buy till around 15,040. I expect that if US 100 trades above 15,023, I expect it to buy at 15,000 to 15,040, and even by extension, test this week resistance for today at 15,060. You understand? So I still consider a buy on US 100, but once it breaks above 15,023, I expect a buy to around 15,040, and by extension 15,060. Okay, but in terms of this retracement, let me take out these. Good. In terms of this retracement, if we look at the most recent low on US 100 is this far point here. This is the most recent low on US 100. This zone here on the 15 minutes, and it's also a support zone. We also have our 50 period moving average there. You have a 50 period moving average. So there's a lot of bullish pressure in the US 100 markets. There's a lot of bullish pressure. The only way I'm going to consider selling US 100 is if it breaks below this week's support. If somehow US 100 breaks below 14,940, if US 100 breaks below 14,940, then I can expect it to sell and test today's low. At least if it breaks below 14,940, I can sell it till around 14,915. So if it breaks below 14,940, I can test it in 14,915. And that is what I expect for US 100. Okay, that's what I expect. But it has to break below. Okay, it has to close below. Okay, not just a sell stop, it has to close below, and then we can take advantage of that. But I feel like if it buys to 15,023, I can even enter a buy to around 15,040. Okay, so let's look at GBP USD. Okay, so GBP has been strong against the dollar, of course, because the dollar has gotten to a particular peak and has been experiencing weakness for majority of today. You can see how GBP USD is approaching a double top on this resistance. It made his hammer. He made a hammer here like 4 days ago, and so this buy is fine. Technically, you will see this hammer on the verified support, and that is why some of these candlestick patterns will show us, like the hammer, the inverted hammer, bullish engulfing, bearish engulfing. They are very important candlestick patterns. Those are candlestick patterns that when you learn how to trade with them, you will not even really be waiting for an entry point. You understand? When some people have seen this 3 days ago and they are over 100 pips in profit already. Do you understand? They are over 100 pips already in profit. So, but as it stands like this for GBP USD, if you check, we'll see how many pips we have to this untested resistance. We'll see how many pips we have to this. Okay, close to 30 pips. This zone where GBP USD is, in fact, is a a resistance. Okay, this zone where GBP USD is a resistance. So I'm going to be going in above that point. I'm going to be going in at this 1.27870, going at 1.27870, and then take about 20 pips to around 1.28, the 1.2800 region. Okay, so if it trades above 1.27878, then I can buy it around 1.28045. Okay, yeah. But if somehow it sells below this point here, where I enter my sell on GBP USD is around 1.27405. Yeah, that's where I'll look at it. There's still a lot of strength in GBP. I feel like it's still going to push up, so it will get to this untested. I expect it to get to this untested resistance. So for me, I'll actually look out for a buy on GBP USD. Okay, I'll look out for a buy on it. It's not really about untested, weak, this thing. A resistance is a resistance, a support is a support. This indicator has just been made to, just differentiate from one to another. The one I feel that you really need to explain is one that where they call turncoat resistance, turncoat support. The turncoat support is a resistance, a support that was once a resistance. Okay, and then for those who came earlier, I explained that. I said when price breaks a resistance, that resistance that has broken now becomes a support. So the indicator might just narrate it as turncoat support to tell you that this support was a resistance not long ago. Yes, the indicator also differentiates and says verified resistance, proven support. All that is just because price has tested it many times and has been rejected. That's why it's doing that. Okay, but I always say a support is a support, a resistance is a resistance. Okay, it's very important that you respect a support and respect a resistance. So let's look at Euro USD. This is Euro JPY. The same thing with Euro. The Euro seems to be gaining strength against the dollar. Okay, the Euro is gaining strength against the dollar. As it stands, the dollar was weak, it made a double top, and it's likely that further weakness will continue on the dollar. But Euro USD has also really sold. This is Euro USD on the daily time frame, has really sold. And sometimes when the dollar gets strong against euro like that, you can see that sell continue for a while. Okay, you can see that sell continue for a while. But as it stands now, with what we have about the dollar and what we expect technically, technically, it's not always the case, but technically, we will see that we expect that Euro USD would continue this, this retracement that it is making right now. We expect it will continue it. But the truth is that it's trading tightly right now. It's close to an untested resistance. And how many pips do we have from that zone? You have about 20 pips. We have about 20 pips from that zone, okay, where that untested resistance is. Right now, price is, sentiment of the market looking like there's a short sell on Euro USD. So I'm going to go in above this point here for Euro USD. I'm going to go in above 1.09234. 1.09234, and then my take profits. This is very tight trade. It's about 7 pips. Take profits around 1.09309. That's what it's a very tight trade. Then we have this. I'm going to go in below this zone here. Okay, below this zone. 1.08829 to 1.08705. So let's check. This is 229. We're about to, US session is about to begin. You can see the dollar index is resting on that trend line that has been designed, it has joined that trend line. And so we shall see what it does so remember, if if dollar index begins, gain strength within the next 5-10 minutes of gain strength, then you would expect a fall in the US. So for people who I gave this particular price on DE30, price is already trading below that zone, 15789.5. Okay, price is trading, but remember I said it has to close. If it closes here, then we can still sell further. Okay. Okay, it's 2:30. 2:30 US session is open. I think they'll be ringing bells now and all that. So let's see what the market is doing. Let's check out gold. Okay. Okay, we still have a couple of shaky movement. Let's check out US 100. US 100 that's giving us this particular kind of hammer-like chart here. So we still remember that for US 100, we'll go in at 15,023. 15,023, we will buy to around 15,040 for US 100. Okay. Dollar index is looking like we don't really have any more. This is 230. Maybe in the next 5 minutes we can get some moves. Okay, but let's continue. Let me look at oil. Let me look at oil, and then I'll check out Euro JPY, and then we'll monitor the rest of our trades. For oil has really fallen. Just the same. If you notice, you find out that oil also makes kind of move like DE30, index, because they are all exchanged against the dollar. So most times when the dollar is strong, and every other thing has to just fall. You understand? But for oil, you can see how it has made a progressive push up, and so if I'm to check it on 15 minutes, and what I will advise for oil is, if price can break above, I'm going to mark this zone here above this inverted hammer here. Once price breaks above this 84.75, price breaks above that place, which I expect it to. If price breaks above that zone, I will be looking out for a further buy to around 80. From 84.75, I'll look out for a buy to 85.15. You have very strong bullish indication here. You have a Maribozu here. So I expect this buy to continue. But if it breaks below this zone here, if it breaks below this Maribozu, breaks below this zone here, 83.90, on the 83.90 zone, then I expect that it sells to around 83.62. That's what I expect. Okay, that's what I expect. The dollar index seems to be retracing from this trend line that was drawn. So if it does that, it's going to be headed back up, and that means that indices will actually continue to fall. Okay, like see US 100 has come to test this 50 period. Remember that our entry points are at 15,020 to take profit at 15,040 and 14,940. 14,940 to around 14,915. Okay, that's what we're expecting. Then gold is likely going to keep falling. If this move continues. But remember that we are entering at 1897, and we are coming out at 1895 for our sell on gold. Okay, that's what we're doing. US 500, no move yet, but remember that for US 500 we have it at 4438. We take profit at 4449. But for the sell we have it at 4423. Take profit at 4417. Okay. For US 30, remember that we said it has to break above or below this point. So let it break above 34,930, and then you can buy to 35,000. I think US 30 is actually doing that. So once it breaks above 34,930, you can actually look out for a buy to 35,000. Okay, 35,000. US 100 is still resting on that 50 period moving average. Okay, US 2K did not even, from, okay, so US 2000, not at our zone yet, but we have US 2000 and 1879. Let it get to 1879, you can sell to 1876, and if it gets to 1889, then you can buy to 1892. Okay, that is what we would advise for this particular market. But if this US market push does not bring you these stocks down, then they are going to continue buying. If by 3 o'clock indices starts buying, it will continue buying. And I expect that it will buy for the rest of today. I expect that the index market, US 30, US 2000 will be bullish for the rest of today. So that is what I would actually advise for us to scalp with. Let's look at dollar index has not really made any major move, but US 100, still watching it. 14,940 is the price we are entering for US 100, and then we expect it to test this thing. US, you can see that the dollar is respecting that trend line. You can see it's respecting that trend line that we drew on 1 hour, and from there it's looking to push up. So if this candle closes as a hammer, then the dollar will continue her strength. Okay, so let us make sure that we work with these. We do not really have any other high impact news today, so let's monitor those entry points, monitor those positions that we've been given, and I want to wish us a successful trading day. One other thing I want to say is, please, for those persons who were not with us from the beginning, this link, this class holds 2 times every day, morning by 8 a.m. and 1 p.m. in the afternoon. But every Thursday, morning by 8 a.m. and 2 p.m. every afternoon. Morning by 8 a.m. and 2 p.m. every afternoon. But for every Thursday, when we'll be having the indices market class, the class will start by 1 p.m. till around 2:30. 1 p.m. till around 2:30 to 2:35. Okay, so let's monitor our trades. I want to wish us a successful trading day ahead, and we'll be talking with you with the same link 8 o'clock tomorrow. Please do not be late. Make sure that by 8 o'clock tomorrow you have joined us. Thank you for your time.